I think that if you want to earn a sponsor's trust, you have to show that you don't have any expensive habits and you're not going to get in trouble with the law or anything like that.
Hello, and welcome to this week's episode of the Real Estate Investors Club podcast. I'm here today with Dan Fradenburg, and Dan's got kind of an interesting thing going on. He is located near Ottawa, but does a lot of stuff in the States. We can't seem to stop somehow having mutual points of connection.
Very true.
Yeah,
Very
I was
true.
on his show, and now after somebody in the network ran into each other, it was like, okay, well, you need to have Dan on your show. I was like, okay, let's have Dan on the show. So thanks for being here with me.
Oh yeah, my pleasure. My pleasure. Yeah, it was a real surprise meeting your brother too. That was the other one that was unusual.
All right. So just by way of introduction and letting our audience get to know you, tell us a little bit about who you are, what you do, and what you did to end up on my show.
Excellent. Yeah, yeah. That's a great springboard there. I often tell people I'm the most confusing person in commercial real estate, and the biggest reason for that is because my way to get into commercial real estate is unusual. Very few people try to get in it from a tech/marketing side of business, especially online. But if we rewind back to 2010, somewhere around that neck of the woods, I was working for web.com and its CRM wing. So it was helping people with their online shopping carts and their mass email marketing. And then I started up my own CRM agency to help the high-end clients from those CRM that pool of CRM users. And by 2014, though, as I was looking for, bigger and better clients, I eventually started working for an Ohio firm. And they were flipping 10 houses a month. They were doing 10 house transactions per month. So maybe they'd be buying 5 and selling 5, but there'd be 10 a month reliably for at least 5 years before they even hired me. And the digital side of their business was at about $1 million a year. And within a year or two, I got that up to $3.5 million per year in their coaching wing. And but part of the problem of that, though, is I was in Taiwan. I lived in Taiwan for 15 years, and I was running that Ohio firm from there. And because of that, I didn't have the local advantage, so I didn't pull the trigger on real estate. But back in around 2020, that's when I started making the moves to learn about syndication, how to take down commercial deals as a regular person, as opposed to somebody who's already fantastically wealthy. And I made the jump, and I became a landlord last year for the first time. So it's exciting stuff.
Congratulations.
Thank you.
But so, okay. Are you American? Ottawa?
I'm Canadian.
You're Canadian. Okay, so explain, map that out for me, because it sounds like when I'm talking to you, I feel like it's okay. I'm talking to an American, but you live outside Ottawa, so put that together for me.
Okay, cool. So I originally moved to Taiwan the first time 20 years ago, and that's where I started to pick up. I started to stop saying a boot and a things like that, and because of teaching. But of course, all of my coworkers, most of my coworkers at least, were American. There'd be the occasional Canadian. But of course, when I moved back to Canada and worked for web.com, that's an American company. So basically, I haven't had much of any luck or success working for or with Canadians. And actually even professionally, the professionals I've hired around here have been nothing but a disappointment. It's really a bad scene. I had an accountant where I think that accountants, they have two jobs. The first one is to tell you how much money you owe. Second one is when you have to pay it. And somehow this person managed to screw up both of those. And the tax attorney I talked to originally is like, okay, so here I am. I'm technically an independent contractor because there's no entity in Canada. So, what's my best strategy there? And, they gave me a boilerplate articles of incorporation. They only had to copy and paste my name about 5 times and put the date in there once or twice. And they managed to misspell my name 3 times out of the 4 times that they needed to. And they made up a new date. Terrie, have you ever heard of May December 31st before? 'Cause so yeah, so it hasn't been a great experience on the Canadian side at all. And I guess that means I just have been unfortunate and I've had bad luck. I haven't been meeting the right people, but it basically has made me essentially American, especially because the company I was working for 6 years there in Ohio, that's who I was interacting with day in and day out, and I was putting all my chips in my career, saying like, this is the company I should be with, because they didn't have a CTO. They had a CMO, they had a CFO, they had the CEO, the COO, and I was like, well, they really need a CTO because they're an online business, and so that made me really double and triple down on that. But after seeing my boss flipping those 10 houses a month, I was like, how can I pivot to where I'm being rewarded in the form of equity instead of high wage, high salary, and giving half to income tax? So that's why I pulled the trigger and made the jump to commercial real estate. And because all the people I was interacting with and the legal system that I'd already learned from being the admin of all these coaching sites, like that was one thing I took upon myself as I started going through the courses, because I know that it was highly regulated and I was the one who was actually putting the words on the page. So not knowing the peculiar laws in different states or counties or whatever else, I figured I better know how this stuff works, just to make sure that our copywriter isn't misrepresenting the truth or whatever else doing marketing. So it's definitely a weird way to end up here, but the biggest thing, which is real estate is about your network. It's knowing a gazillion different people and getting what you want to achieve done by making a new team.
Mm-hmm. So you did all of this like working remotely?
Mm-hmm. That's right.
Before that was cool.
Oh yeah, way before it was cool. Yeah, so I quit at web.com at the end of 2011 after I'd already had my agency for a little bit, and then from 2012 on, it was all remote based. So basically, a solid 8 years before work from home was something people really had their heads around at all.
So it's very interesting, and I'm like trying to line up my next question. I'm like, I don't even know exactly where to go with this, because there's like so many different threads that I could potentially pull on. So tell me a little bit about the technology side of your business. So you say you work for, like, I guess it's a real estate coaching.
So they're an actual, they're actually a syndication and commercial real estate. So it's multifamily real estate investors. Before that whole stage, they had some single family, long-term rentals that they're in their portfolio. But the main thing they're emphasizing is that the real estate has to be first and the coaching has to be second. That's also true of the company I was with for 6 years. But they already had the coaching wing developed, whereas we're developing the coaching, and that's growing in a big way over the last year that I've been with Lauren Capital. But the main thing is they're buying up their hometown, which is Wichita Falls, Texas, and I'm there to facilitate in any way possible, that's the nature of small business, is you got to wear lots of hats and you got to be prepared to do whatever's going on. But I guess the missing piece of the puzzle for those of you in the audience is that when it came time for me to pull the trigger and become a landlord and get active, I knew that there had to be a personal branding and marketing element to it. So I really doubled and tripled down on that part, even though the technology was my strong suit. It's been an interesting little thing, but just basically to get people aware of what I'm offering and what I'm doing, and to join on these different GP teams, the marketing had to be there, but the tech itself is creating online funnels for it can be for capital raising, because there's a compliance part of that. You have to make sure that you have a documented substantive relationship, because once you get to a certain number of assets under management, the SEC will audit you. And so you have to be able to prove that if you were using a private exemption like the 506B exemption, that you weren't publicly soliciting people. And I'm like, well, how do you even pull that off? They say, okay, so don't entice investors. And I'm like, well, I don't know enough investors. I need to 100x the number that I know. So how am I going to do that without enticing them to at least come on a podcast? And then, of course, as you get further in, you find out that enticing is fine as long as it's not to sell them a security. In other words, passive interest in something, passive ownership. So that's basically how that all fits together, even though, like, as I said, it's confusing and weird.
Yeah.
Have you really been listening to the episode, or has your monkey mind been taking you off in one direction or another? Our mental habits can be our biggest assets or our biggest liabilities as we pursue certain goals. For me, the biggest performance gains have always come from training my mind. In my book, Mindful Landlord, I talk about how you can train your mind and how you can apply some of these strategies to your journey in the real estate field. The book is available on Amazon and also on its website, mindfullandlord.com. And now I'll stop evangelizing for the power of mental training and let you get back to the show.
So tell me about podcasting. So I was on your show. When did you start the podcast? What's the subject matter? How's that adventure been for you?
Right. So podcasting, because of my tech side, it's definitely my competitive advantage. And I realized that right from the start. I've been doing video related work since the 90s. And so that meant that this piece of the puzzle, I knew that everybody would be relying on. You have some people who are paying about $250 an episode to have them published. And I know that I could do way better than that. But one of the problems I ran into is I knew I had to pair up with a real estate or commercial real estate sponsor. And I had to not get, the red flags going as far as interpreting me as competition. So when I first got started with podcasting, it's with what's called the Figure It Out series, and especially the Figure It Out Dream Job series, which is where I would interview somebody who had some sort of job that was enviable. And I'd ask them, okay, if somebody wants to end up where you are and they have no friends, no family, and no cash, how do they pull it off? Is it even possible? What character traits need to be developed for you to stand a chance at pulling it off? Which ones have to be, basically eliminated, or, like what changes do you have to make to pull these things off? And so that's what I started off with. And that was pretty fascinating because I got to meet some pretty wild people, like the world's fastest reader, an opera singer from Broadway, like different things like that, and getting that really through. But the podcast that has been more responsible for more of my success, it's the Chance Encounter series that I had you on. And the thing that's innovative about that, it really comes from the fact that I'm a CTO. So coming from CRMs, I knew I had to save information about people. And I also wanted to have proof that I knew people's level of sophistication, appetite for risk, and core competencies as it relates to commercial real estate deals. And I also knew that there were all sorts of people getting into this industry that are having these 2-hour-long phone calls with everybody who's a potential investor or something like that. And very often they'll come to, it's like, okay, cool. Well, it's a neat little friendship, but there's never going to be any business going on here. And I was on too tight of a schedule to start making real estate work for me, right? So what hit me is like, well, what's a situation where I can make sure somebody's not, distracted by their phone? I've got their full attention. They've got my full attention. But at the same time, because I was starting off as far as like getting any real estate under my own name, I had to also demonstrate that I understood how the deals work. And so that's why what I do is I'd offer to the audience, anybody who subscribes, I'd go through how people vet each other in this industry. How do we find out that this person will check the boxes that we don't have checked in our deal. So like if we don't have boots on the ground, who's going to be the boots on the ground? Are you going to be that person, or are you really relying on, your, like maybe you're a fund manager is more what you're up to. And so you have your group of friends that you raise capital for your fund, and then that's how you invest. Well, those people, they'll check in on how the deals are doing, but they're not going to be your everyday, or, oh no, we've got, a roof leak in apartment 3G, can you show up with a bucket? Like it's a different kind of deal. So figuring that out was the big one. So that's why I made my 15-minute format where I'm just asking, so why are you doing this? What role are you actually going to be doing? What's your buy box? That's one of the key ones, right? Because there's completely different groups taking over 5-unit apartment complexes compared to the 150s and 250s. So those are the things that I really needed to know to have a list where I knew that if I had a deal, then I could give them a call, and I'm not barking up the wrong tree. I'm really going for it. It's like, hey, you said you were looking for exactly this thing. I happen to have exactly that thing. What do you think? And that was my entire approach there, and just making sure that it's just super highly visible. But I've been really open about that part as a strategy, just because I think pretty much everybody's going to have to do some version of it going ahead. You're going to have some sort of way to document your investor relations. And for me, I was making sure that it was impossible to forget. Like how do you make sure that, like there's a joke that I have, like I have some joke ads that I might start using for 506B me. One of them, pardon my French, but is 506B me so we can get shit-faced later is the joke. Because it's like, like if you have a deal, if you have a commercial real estate syndication going on, that's all you're thinking about day in and day out. You meet somebody new who says, oh yeah, I'm a commercial real estate investor, I'm always interested in anything, especially this here. You're not allowed to tell them because you don't have a documented substantive relations. So that's the thing that I was going like, well, how do I make sure that I never forget? It's like, well, have I had the interview yet? Yes or no? If the answer is no, then nope, you're not going to hear about my private deals. So you better spend that 15 minutes. So
that's actually like very clever. And I mean, I think you maybe, how can I say, consciously did something that a lot of real estate people fall into unconsciously. And I think, like, obviously, you had a little off-camera discussion earlier about, Canada and why you ended up doing so much business in the States instead of doing it in Canada. We're talking about let's say the level of play, right? And so for sure, I mean, I think the number of Canadian investors, capital raisers, whatever you want to call it, who have podcasts, like there's not a ton of us, and like, for example, in English, like I know there's like me and the person I share an office with are the two real estate podcasts in Montreal, right?
That's so funny.
Yeah. But what surprises me, like when, I go to conferences, I went to a podcasting conference in Orlando. I went to RubeCon in Phoenix, which was like a smaller real estate conference. Americans all have podcasts. Or like if they, or else someone in their organization has a podcast because they realize that that's just such an important part of this piece of the puzzle as far as, generating content and visibility and like making connections and like, I guess like you're saying also like documenting relationships for going forward to and I mean, also the fact of like making some of those contact making communications meaningful, because you're absolutely right. Like, and I don't know if this is really has a space on this podcast, but I'm going to say it anyways. Like nothing irritates me more than like when I'm, looking at a guest and I'm like, look, just come on the show. Like we'll have a half-hour conversation. It's going to be fine. They're like, no, we need to have a discovery call. And we need to schedule this. And well, like,
what's this about again?
This is the discovery call, right? Like, let me discover exactly. And let everyone else sort of benefit from that. Because I mean, what's for me or us in the industry, what's interesting to us is a conversation. Like, I think it's interesting to our listeners as well, right? Because like, there's a reason why we're going out and looking for that information. So just let's have an interesting conversation and let's record it.
That's exactly how I feel, and it was so important as a whole for the whole thing on dandoesdeals.com, just getting that information quickly, and also having a format to make sure that even if you just decided like a month ago that you're getting into commercial investment, then you're not going to look like a complete dummy who has no idea what's going on. And like that's what I did on purpose. And you can
Yeah.
check out the format on
Yeah.
dandoesdeals.com. There's over 250 episodes on there. But the idea is, even if you're starting, you should still be able to answer those questions, because I'm explaining to the audience as if they're coming from zero. So if you're above zero to begin with, it should be really easy. It's not awkward, much of effort. I've had one person who came in who didn't know what kind of unit count they were looking for, because they were a marketer, and I'm like, uh-oh. Like it seems weird, because like of all the things that are subjective in this industry, I think unit count is the most. Okay, it's like, that's where rationality and irrationality collide. You say, it's like, okay, so like, but are you more comfortable with 150 units and having this much control and this much ownership, or do you want to have more ownership on a smaller number of units because you think that you can handle whatever problems that'll happen? That was just a really weird occurrence. But in general, people, that's over 250 who just went through the whole process, and it was fantastic. So
Yeah.
really strange.
Yeah. And I think you're also, touching on another interesting thing, which is that it's such a great platform for educating yourself. Like I say, for me, like podcasting, it's like at least 70% a selfish enterprise, because like I get to have these like interesting conversations with people about stuff that maybe I don't know so much about, or like educate me, tell me about this. I want to know, how does this work? Right. And so you get to have these like little educational segments. Okay. So I see we're kind of like getting into the time, and I have like two final questions that I really want to get to, but let's finish up with your business. Do you want to tell me anything else that I might be missing, as far as, what stuff you do, what your business model is, what you're looking for?
Great. So, I'm always interested in talking to anybody who's looking to invest in the United States. And the most important thing is that I might not, there's actually a huge chance that I won't have anything that's a good fit for you. But at least what I wanted to do with my interviews, my podcast, is make sure that nobody walks away empty handed. At the very worst, both of us walk away with a piece of content and, like somewhat of a relationship. But what I did, answering what 506B is all about, is when it got to the point of, I'm going, well, how do I help people with my CRM background, where I can give them, like as much as they absolutely need from a bare bones perspective, with as low of a cost as possible, because not many people have a business that'll support a 6-figure CRM person, for their CTO. So 506B it's the platform that I'm offering, that documentation of your substantive relations with investors. So if you want to make sure that you have something in hand to show, it's like, look, I knew this person. I knew that they understood what an illiquid asset is, because that's really the crux of the law. It's you just got to make sure that people understand what they're getting into before you sell them a security, or else they're basically going to assume that you're a Ponzi scheme, which is a very scary prospect. So if that's something, if you are going to be syndicating, especially if you want to be in investor relations, sometimes people call them capital raisers. You have to be super careful when you call yourself a capital raiser, because if you want to be on a GP team, you do have to have some sort of actual role where you're not just making it up, and you can look at a judge straight in the face and say, oh, no, I'm actually doing stuff for this building. I wasn't just in charge of bringing some money and getting a piece of the action for that. If you want to do that, you're supposed to have a fund and do it that way in the U.S. And I still haven't got my head around how you're supposed to do it in Canada, and that's why I don't. But that's the biggest part of my business, is that if you want to know how to document your relations, then 506b.me is the place to be.
Great. That's actually really cool. And I love the explanation you just gave, because I feel like I've had versions of this conversation a bunch of different times and nobody like mapped it out so clearly. Like, obviously we all know, what's it's the IMF, like the security. We have our own securities commission in the States. There's like a different version, but like ultimately they're looking for the same thing, right? Like they're looking to track that you're not just out there Ponzi scheming people and selling them pie in the sky deals, and that like in order to pitch to investors, you have to have a way of vetting them. And because that's not my business model, that's not my role. It's always been like a little bit opaque to me, but I think well, thank you for mapping that out. I want to just change the conversation a little bit to, I guess, my two favorite questions of the interview, which the first one is, we're in an industry where there's like a lot of bling, a lot of Instagram, a lot of yachts, a lot of stuff like that. And I think one of the things that people don't share often is the lifestyle hits that they took and the challenges that they faced to get where they are. So do you want to tell the audience a little bit about like what are some of the less sexy things you had to do to be where you are? What are some of the sacrifices you made to attain the level of success you have?
I love that question. So the first thing is to understand that, excuse me, there's someone called a deal sponsor. That's the person who has the most money. They're the ones who are signing on the dotted line saying, okay, like if for whatever reason this, we aren't able to pay the debt service, the loan on this building, I'm the one that's going to make the bank whole. You have to earn that person's trust. Like people act like, like every other person, you have to earn everybody's trust. And that's true to a degree. But the fact is a sponsor is not going to, give you part of the deal unless they actually are confident that, you're going to be helping, you're actually going to make their life easier. So it's all of that flashy stuff. I want to add one other thing, which is that because, like I was a guitar teacher in the 90s at the local music store. And so I learned, like what rock stars do. And I learned how they make music videos, how they'll rent a Lambo. It's not actually, they don't actually these rappers, they don't actually have their own Lambo because they're maybe making like $40,000 a year after all the deductions and all that kind of stuff like that. And it's all just fake. And it bleeds over to real estate really, really badly. And I think that if you want to earn a sponsor's trust, you have to show that you don't have any expensive habits. And you're not going to get in trouble with the law or anything like that. So I would really recommend don't be flashy, even if you can. And the other thing too is that the reason why I love the question so much is because that is one thing that I like to hit hard on is just that if you have all these flashy things, who do you think's paying for those? It's the investors. It means, you are skimming the returns so much that you can, and I'm being kind of specific to this because this has been bugging me for a while, just so that you can buy your mentor a Lambo, just so that you look good so you can sell more coaching. That is not nice. That is not good. And like at the end of the day, it's like, so sure, the investors are getting a bad deal. Well, what about the residents that are trying to scrape together some money? How happy would you be as a resident in these kinds of inflationary times, finding out that your rent money is going to some syndicator's mentor's Lambo? It would really piss me off. It would, and so it's not a good thing to do at all. And so and as far as me tightening my own belt, it's like, holy crap, getting to like low five figures in a year. Whoo, it's scary. You really have to tighten that belt, if you're going to earn people's trust, because they need to make sure it's like, okay, so the way that the law works, at least in the United States, is if you kind of drop the ball and you don't do your work, there's not a whole lot of legal recourse. And so they need to make sure that you're going to stick around for the 5-year hold period, even if it turns into 7 or 8 or whatever, even if distributions are paused for like 3 or 4 years, they need to be confident that you can take the hit and you can find some way to make things work. Me, like because of the CRM thing, I can get, like a couple CRM or website funnels, clients, and then I can basically make ends meet fairly easily that way. And that's definitely a plus to my sponsors. But I think that answers your question.
Yeah. Yeah. I find that like it's a very interesting perspective. And I think it's actually like, I think you're absolutely right. And I think you're right about two things. I think you're right about the fact that I will not name anybody, but like, I do know that there are people in the real estate industry who are very happy to take photos on private jets and do various different kinds of things. It's not necessarily theirs, but it's like this music video kind of Potemkin Village bling show. So I think that's 100% the case, and that one shouldn't necessarily be fooled by it. And the other thing is like, yeah, I mean, what are you actually doing, right? Like, whose money are you spending, and how happy would the people involved in things be to know that like what's financing your 6-figure lifestyle is that, right? So,
and the same goes for Wall Street and Bay Street in Toronto.
Yeah.
Those skyscrapers. It's our pension plans that are paying for it. It's our So that's what I love about commercial real estate, is to get your money off of Wall Street, where they've got this culture of take.
Yeah. Yeah. Okay. Well, that's a whole other podcast. Let me ask you the last question, and maybe maybe this your previous answer is going to answer that, but what do you think we should be talking about in the industry that we're not talking about? What is not on our radar that you wish was on more people's radar?
I guess one thing is that it's every bit as competitive as people think it is from the outside, which means it's more competitive than a lot of people think at the beginning from the inside. So if you're in a coaching program, you get all high and it's like, oh, wow, it's like, this is a $5 million building. That's more money than like I can even imagine. It's like, yeah, but can you imagine 0.01% of 5 million? Because that's a lot more accurate as far as like what you're going to be actually getting out of it in a lot of cases. This is not the fast way to get rich, and people who present it that way, they're either deluded or being dishonest. It's pretty bad stuff. If you had all the resources, the financial resources in the world, the only thing you'd buy are things that are cash flowing positive. And if that's the case, then why would they give exactly what they want to anybody else? You got to have a really good reason. And so that's what you got to do, is you got to turn around to these sponsors and give them very good reasons to include you in it. And then you can pull it off.
Yeah. No, I think that's I think it's a really great point. Okay, so we're out of time. How can people reach out to you? How should people connect with you if they want to know more about what you do?
Awesome. So Dan Fradenburg, fortunately, it's a very distinct name. So I'm super duper easy to find, especially on LinkedIn, which is where I spend most of my social media time. So be sure to connect and reach out there. But 506b.me, that also has some ways to get a hold of me. And if you just want to check out more podcast episodes, meet a few syndicators virtually, it's at dandoesdeals.com.
All right. Thank you so much for spending this time with us. Guys, we're going to drop all those links in the show notes. So do take a few minutes to go check them out. If you liked what you saw, definitely check out Dan. Share this episode with a friend, subscribe. You know the drill. Thanks for spending this time with me, Dan.
Thanks. Great talking to you.